Well, hello, traders and investors. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets, and we're doing it from a neoclassical perspective, meaning each time we ask ourselves what happened last week and what does it tell us about the coming ones. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, reach up there and hit the subscription button. Each time content's pushed, you'll get a notification. That's true of the weekly and the daily wraps. So please, if you're interested, if you like what I do, put a like up there, send it to a friend, spread the word. I appreciate it. As far as what happened last week, it was a down week. If you look at the numbers, pretty heavy selling, in particular in technology. They are taking the leaders to the woodshed. And usually bull markets end when those big stocks that wouldn't go down start to get sold. And that's what they're starting to do here. Now, you can't take 1 week and say, okay, that's it. But you definitely could look at it and say, well, that's something I need to watch, and that's something we should be watching. So big losses in tech. Russell took it pretty hard. S&P held up better than the others. Divergent. Why? Well, because you've got some rotation into some of those beat-up names like XLB and some of the others. Elsewhere, the DAX breaks under swing point lows multiple time frames. We'll look at that, and I'll show you what I'm talking about there. It's not a good sign. Gold up, silver up. The metals are starting to make that turn we talked about was possible, and oil down on the week. Let's take a look at the week-to-week numbers. If we look at those, right, for February 7th, you can see the kinds of losses that were hit. 5.4% on the NASDAQ. That's heavy selling, down 13.2, 12.9, 8, and 7. So we're talking about fairly significant selling across the board. So let's switch over and take a look at the indexes themselves. We're only going to focus on about 2 or 3 things tonight. Of course, there's a lot more happening than that. One of the things we want to look at is that ABCD structure. Remember, there was an ABCD structure in place that was supposed to take us higher. Well, it didn't happen. And now you're down here. And if you take the high of the low and draw a bar across it, right, that's the breakdown part. That's where the zone is. That's where this green zone is that says that's where you try to buy. If you're going to buy, that's the place you want to try to buy. That's usually where you should see buyers come in. That's what it's telling you. The resistance is up here. That's where the sellers should come in. And so on the S&P, that buy zone is here. And the bad thing is that you're coming into it without any real good support. And what I mean by that is we should have had that extension of that ABCD structure to the top side. It didn't, came back. As a matter of fact, when we look at the NASDAQ, you'll see it actually failed. And so that suggests that ABCD structure pretty much has failed across the board. Here's the weekly. Weekly's coming back. Swing point low is the target on the downside. 1867, that's the August lows. You're just above it. You're coming into it. Look at the volumes here. 260, you're coming into it with 240. That's going to be the test. You had that big high volume low as well. So S&P's kind of on the ropes here and at their support zone. If they're going to catch it, they're going to have to catch it here. If you move out to the monthly, you've got the whole ledge up here. And so just visualize what's happening, right? You've had a big run, a long run, and now you're rolling, right? And I've pointed this out several times. As you roll, you come into key areas where you're going to try to find support. And in this case, you've got it right here. That's what we just pointed out on the daily. That's also what we were looking at on the weekly on that August low. Underneath there, the next swing point lows are the next target. So in other words, if you break there, you're going to try to get down to this low, which was also a test of that one, which was October of 2014. So if you look at these and you understand what they're doing, you can see what's starting to happen here, right? You got the rolling top. You're at what is kind of critical support now. If you break it down, you're going to try to take out on a monthly basis a swing point low, which would transition trend. Now, the NASDAQ was the leader to the downside last week. Now, the NASDAQ, if you look back at it, and I'm going to pop straight to the monthly, the NASDAQ has been the leader to the upside. So if we go back and we look This was the index that took us up largest percentages. And when we had that breakdown, both in October 14, right, the NASDAQ was the one that took us back up to new highs. And then when we had the August low, the NASDAQ actually took us almost to new highs. And on the NDX, we actually went to new highs. That's because that's the concentrated big cap names. Now, what's leading us down? The NASDAQ, the NDX. That's not a good sign. That's not what you want to see, but that is what's taking place. Again, just like on the S&P 500, you have those lows from August. There's really nothing up underneath them until you go down to the next set of lows, which is here on October. So NASDAQ, if it breaks down, that's the target, and that's way back at 4,100. So if you're in this market, right, you're still sitting at 43. That's another 200 points of a downside if this thing gets to rocking and rolling to the downside. Let's look at the, actually, let me go back to the NASDAQ again instead of the NDX. I want to point out one other thing. You got a swing point low here, and that's on the daily time frame. If you look at it on the weekly time frame, you've also got a swing point low at the same spot. So what is that? If it breaks down there, it breaks multiple swing points on multiple time frames, and usually that is not a good situation. So NASDAQ is one you want to keep your eye on. Of course, the other indexes matter, and as I was just showing you, the NDX itself is even weaker. Going after the swing point lows, probably going to hit them, if not tomorrow, then Tuesday. If we look elsewhere, you actually have those lows that we were just talking about on the NASDAQ. You actually have those lows breaking here on the DAX, both on the daily time frame and here on the weekly time frame. So on the DAX, you're already doing what we were just talking about on the NASDAQ. You've got the confirmation on the low. You're breaking it down. You don't have the volume, or actually you do have slightly heavier volume, just barely, right? Slightly heavier volume. That's why you got the green arrow here. And as far as the green arrows, you know, I have been doing on a weekly, on a daily basis on the shows, been giving you an idea of how to read these charts. We've talked about swing point lows, we talked about swing point highs, how they're measured, but we haven't talked about breaks of those. And this is a good chart to actually do it on. So if we're looking at the DAX on the weekly basis, you actually had a break. That these arrows are trend transitions. That's what they are. And we already had a trend transition here. How do you get a trend transition? Well, you break a swing point low. If you look back over, the swing point low that had not been broken was over here. And so when it breaks underneath it and closes underneath it, that transitions trend. And in this case, it was suspect. In other words, the volume on the bar that did the breaking was not as heavy on the bar that was broke. So it's suspect. In other words, it probably will not carry as long as it would if it was confirmed. Here you have confirmed. So you just broke this swing point low, and you broke it with volume escalation. So again, not much escalation, but a little bit. And so that break, as it breaks there, right, the volume here is lighter than the volume there. Heavier than the volume there. Therefore, it is a confirmed, and in this case, a confirmed reconfirmation of the bearish trend that was already in effect right here. That's how these get made. On the top side, it's the opposite. You got to break a swing point high to get a trend transition to the upside. This particular chart doesn't even have one. So we go back a year and we haven't had a trend transition to bullish on the DAX, even with that huge run. And that's because the DAX, if you look at it on the monthly, that huge run never had a swing point high. It never set up 6 bars to get a swing point high. That's one of the anomalies of this particular model. It doesn't cover everything, and we don't make exceptions. We keep the rules simple and the same across all time frames, across all charts. If you don't get a swing point high here, you can't get a trend transition there. But you know what, folks? It didn't matter. You already had it here. You're already bullish. And so you just continued the bullish move all the way up until there. And then you finally, on the weekly charts, you started getting some downtrends. Here, you don't have that yet. You haven't got a break yet. Where do you get a break? Well, on the monthly time frame, you got to break a swing point low. That swing point low is way down here. So even if they break this ledge and they get a faster move down on the dailies and the weeklies, they won't have it on the monthlies. At least not yet. And that's today's lesson on the TA Today neoclassical charts. But the main thing here, the DAX, the NASDAQ, that's what you want to watch. That's where the action is going to be this week. That's where the tell is going to be this week as well. I'm going to leave it at that. As I said, there's a lot more that could be covered. I did cover all of that, of course, in the weekly member notes. If you're not a member of TA Today, it's cheap and it's good. I wouldn't call it cheap. I'd call it very affordable. If I scoot this over so you can see it, you know, you can't beat the price. You just come over here, pop into this, do a free trial, get a couple weeks, see the detail I give members, the kind of offerings that we have for less than $15 a month if you do the yearly. You can't beat that kind of price. Folks, have a great one. Thanks for joining me. Have a good week, and I'll see you tomorrow. Good night.